Welcome back. You're still tuned into markets at noon right here on ET Now, and Nifty now is sitting with a cut of nearly 55 points as we speak, but we have clearly recovered from the lowest point of the day and now trading near that 25,950 mark, and we are inching closer to that 26,000 mark which we touched a few days ago as well. Nifty Bank has been an outperformer today, trading in the green like Nifty at that 58,970 mark. As far as the other gainers are concerned, Interglobe Aviation is under pressure today. That one is down 2%. The biggest loser on the Nifty 50 index, followed by Hindalco. In fact, not just Hindalco, several other metal stocks also continue to remain in focus today. We have a Tech Mahindra, Tata Consumer, Jio Financial. All of those stocks continue to remain under pressure today. On the gaining side, we have Bharti Airtel. That one is down. That one is up nearly 2%. The biggest gainer today. Axis Bank, Asian Paints, Power Grid, Shriram Finance, all of them gaining in excess of 0.5%. In fact, let's also put the spotlight on a few newsmakers in trade today. We have the likes of Paytm on the back of that block deal that took place today morning. Emphasis, where Blackstone likely sold out stake. So both these counters in focus on the back of that block deal. Remember, we will have the details of buyers and sellers later today. But Emphasis down 0.6% after that block that took place. We also have GMR Airport on the back of that Jefferies report that has come in. So this counter is buzzing in trade. That one should come up for you on your screens, up 4.5%. We also have WeWork. Jefferies has initiated coverage and they continue to remain very bullish on this counter. So that one is also gaining in trade, up 3.5%. And PNB Housing Finance's other counter that is buzzing in trade. But to understand what the fundamental market setup is looking like, we now have Mr. Alok Agarwal, Head Quant and Fund Manager at Alchemy Capital Management, now joining us. Mr. Agarwal, afternoon, and thank you so much for joining us today. Tell us, what do you make of the market at this point in time? Perhaps India-US trade deal is likely to be signed over the next few days. Most of the uncertainty is now behind us. Second quarter earnings were not as bad as feared. How do you position yourself in this kind of a market?
Hi, good afternoon. Yes, absolutely rightly put. The soundbite coming from the Commerce Secretary also suggests that the first phase of the trade deal may be announced very, very soon. So that would be a key positive and a key milestone that the markets have been awaiting. And the earnings numbers were actually quite good. At the backdrop of the kind of overall numbers of the GST growth that were coming, it seemed that the overall economy's growth was not very high. But under that context, for Nifty 500 to report close to a 16% earnings growth year on year was quite phenomenal. Especially, this was the best quarter in terms of growth in the last 6 quarters that we have seen. And all this is happening, that is their data till 30th September. From October onwards, we do see that benefit and tailwinds of the GST rate cuts also. So the starting point is quite good, and the next 2 quarters look even brighter than now.
Hi, Mr. Agarwal. Good afternoon. This is Ankita also joining in. Interestingly, I was just going through your portfolio allocation for your Alchemy Smart Alpha 250. You are overweight. Actually, your largest weight is in the mid-cap space with almost 63% weightage in the mid-caps. What is giving you comfort in the mid-caps? Because as of now, if you speak of valuation comfort, that lies in the large caps. Also, we've been talking about how mid and small caps, despite the correction, are still a bit frothy. What's making you positive about the mid-caps then?
So let's put in perspective. We mentioned that the Nifty 500 earnings growth was at 16%, best in 6 quarters. But if we now segregate them into the large caps and the mid caps, the large caps reported single-digit growth again this quarter. And this was the 6th straight quarter of single-digit growth. So for a single-digit growth for 6 straight quarters and the next 2 quarters not looking phenomenally better than what has been there in the recent past, 21 times earnings valuation has been assigned to it by the index. But if you look at the mid-cap side, that valuation is trading around 27 times on 1 year forward, which is close to 30-35% premium to Nifty. But the earnings growth has been quite good. It has been above 25% year-on-year growth for this quarter. And 4 out of last 5 quarters have reported earnings growth of in excess of 20%. So the earnings growth wise, the far more higher number, and the visibility of that is seen in the mid-cap space. So that's why the majority of the winners, majority of the higher growth segments are lying there. Plus, a lot of the key performing sectors of yesteryears are all in the large caps, which are finding to grow at a higher double digit, that much more difficult to come by. So that's why we see that higher allocation has been there on the mid cap space.
Right, Mr. Agarwal, so clearly your tilt is towards growth versus valuations, or because like you mentioned, mid cap is trading 27x 1 year forward, and that is a 35% premium to Nifty. So at that valuation, also you're picking stocks that are growth. Your tilt is towards growth. Is that the investment strategy that you would recommend? Growth versus value, you would perhaps tilt towards growth segment?
So often obviously looked at as a growth market, but our investment philosophy is deeply rooted in growth at a reasonable price. And for measuring what is reasonable, one has to look at growth and the valuations in context of that growth. So a 20 times Nifty forward for close to a 10%, 11% earnings growth works out to be 2 times on PEG ratio. That is the P ratio divided by earnings growth. A 27 times P valuation for mid cap for nearly 20% earnings growth works out to be only 1.3 times on PEG. A lower PEG actually shows that it is far more reasonable. So while the premium is there, and that premium also is in line with the 10-year average premium, it's not extraordinarily high. But given the higher growth rate, those premiums are quite justified.
Okay, and Mr. Agarwal, since we are talking about valuations and since you also told us that you like mid caps versus the large caps, any sector specific ideas that you like, especially basis the second quarter earnings where you've now revised your outlook and have turned positive?
So the that are growing at good pace. So look at the financials, especially the PSU banks, the small private banks, and the whole capital market space. They have been growing quite consistently and higher pace as well. Coincidentally, again, most of these names happen to be in mid caps. Once they grow in size, possibly they'll go to the large cap space as well. Within the industrial space, again, there are few defense companies, few power companies as well that are growing at a very good pace. Their order inflows have been quite good, and hence the visibility of earnings is also quite strong. And often we have now seen that a lot of metal companies have been doing pretty fine, especially on the back of metal prices going up, the overall inventories going down globally, the supply constraint being there, and China also putting a cap on the production of certain metals. So that is working in favor of those metals as well. So these three segments actually quite stand out, apart from consumer discretionary and consumer tech companies that offer their platform businesses that are aggregators in themselves, either for the distribution of goods or services. So these 5-6 segments have been growing pretty fine and are actually showing the visibility of higher earnings growth in future as well.
All right. Thank you so much for taking the time out and joining us and weighing in on the markets, Mr. Agarwal. With that, it's time for us to slip into a short break. Don't go anywhere. After the break, we are getting you more updates on the market. Stay tuned.